Joining us now to discuss is Jason Deane, Bitcoin analyst at Quantum Economics. Jason, what times we are living in the crypto industry right now? I got to ask, did you have any funds on FTX? Are you okay?
Yes, I'm absolutely fine. No, I didn't have any funds on FTX. Obviously, I do use exchanges like many people, but I don't keep much on them. I tend to self-custody, and it's for exactly reasons like this.
All right. So we are seeing, nevertheless, a lot of contagion effects. So people who thought they didn't have anything to do with FTX may find themselves dinged in other ways. So Genesis is halting withdrawals in their lending arm. BlockFi also preparing for bankruptcy. Where do you see this going?
Unfortunately, nowhere good, I think, is the short answer to that, Christine. Once these things start unraveling, they really do continue unraveling. Everyone's got interest in everyone else. A lot of this stuff, well, pretty much all of it, as you know, is pretty much unregulated. Some of these exchanges have been kind of operating on a trust me, bro basis. And of course, all of that, once that unravels, it causes a run on the exchange, which exacerbates the problem. So look, we have still got a long way to go yet until this shakeout is finished. I think we're going to see more casualties.
You mentioned a lot of these are unregulated, which is great in times of a bull market, but in the bear, you could use a little more consumer protection around. Is it time to regulate? Do you think this will hurry up regulators or not? Actually, we spoke to a former SEC commissioner, or rather attorney, who said that this may not even push U.S. regulators to finally make a decision because it's just so difficult.
Well, it is difficult, but it's also necessary. I mean, let's face it, it's a mess. It is an absolute mess right now. And a lot of this is to do with lack of regulation, which has allowed people just to do basically whatever they wanted to do with people's funds. And you just can't have this. This whole area does need to be looked at and managed sensibly, which is something myself and many of my colleagues have been calling on for a very long time. The other point I would like to make, Chrissy, on this is this whole thing shows very much the difference between Bitcoin, which of course, people like you and I always separate out very much from crypto. Bitcoin very much being the commodity, crypto really being almost like equities in the marketplace. And those need some kind of control and regulation, and the management of those, as well as moving between fiat and things like Bitcoin and crypto. Those are all the areas that need to be looked at. And, I'm hoping this does move this along, and the shakeout will ultimately lead to a good place. I mean, this is probably our .com at the end of the day.
Mm-hmm. Our Enron, our Lehman Brothers. So I get a lot of questions on whether right now is a good time to buy Bitcoin. Is the bottom in?
Well, I mean, as you mentioned at the top of the program there, that the trading analysis says it's pretty poor. But to be honest with you, times like this, trading analysis is out the window as far as I'm concerned. We're now looking at events really superseding a lot of the trading analysis, technical analysis that's going on. So look, there could well be further to fall. I wouldn't be surprised at all if that happened. That will cause problems for a lot of organizations, some mining companies as well. I always think any time's a good time to buy Bitcoin, but that's not financial advice. It's just my personal opinion.
You mentioned miners, so there are a lot of mining reports out. Hut 8, as well as Bitfarms report this week. Tell me a bit about what's going on in the mining industry.
Well, I'm a miner, as you know, so I'm pretty close to this. This is something which is, I'm passionate about and I do follow. It is pretty messy out there. Now, a lot of these miners, these mining companies did get their funding during the boom time. And, getting money in those times is actually quite straightforward, but equipment's expensive and you tend to lock into less preferential terms because you want to get mining. So actually building in a bear market is hardest to get money, but it's a better time to build. Now, interestingly, the reports that came out this week, Hut 8 and Bitfarms in particular, they're quite different. I mean, Bitfarms has got fairly low liquidity at the moment. Hut 8 has got pretty high liquidity. I think the number quoted was 227 million. So they are in different positions according to how they're set up. But look, a low Bitcoin price a prolonged level creates real problems for miners because you still got your ongoing costs that you've got to manage, and a lot of them have got a high debt load that they have to manage. So the lower it goes and for the longer it stays there, the bigger problem you have. Now, at this level, these companies are struggling. There's no question they're either looking for liquidity or having to sell Bitcoin. If it goes lower, this problem will move quickly and we'll end up with another contagion situation in the mining area.